Stop me if you heard this before. Nvidia just smashed all expectations while reporting record profits and revenue. The AI train continues on Wednesday. Nvidia reported earnings for the fiscal Q1. Revenue was $26 billion, up 18% quarter over quarter, 260% year over year. Basically, they quadrupled year over year on billions of revenue. This chart is bonkers. We've never seen anything like this in the history of Silicon Valley or corporate America. This is if somebody like literally was mining coal and then found a diamond, a gold mined underneath it. It's bonkers what's happened here. When you look at the revenue there, the sort of slow growth or moderate growth revenue that they experienced, that was all because Nvidia was primarily providing GPUs for people playing video games or mining crypto. And then what you see with this unbelievable 6-quarter run and 5-6-quarter run is companies like Microsoft, Google, Tesla, OpenAI, etc., buying just billions and billions of dollars worth of hardware. I'll end on this and Chamath and get your take on it. Here's 2019, top companies by market cap in the world. Obviously, Microsoft, Apple, Amazon, Google, Berkshire, Facebook, Alibaba, Tencent. And then you get some of the, incumbents and legacy companies, J&J, Exxon, and JP Morgan, Visa. Way down on the list in 2019, number 84 was Nvidia. Today, Nvidia is the third largest company by market cap behind Microsoft and Apple and ahead of Google, aka Alphabet and Saudi Aramco. Chamath, what's your take on this? Will it continue? And how do you conceptualize this level of growth on such a big number?
I mean, I think it's a really, really incredibly fun moment if you're involved in anything AI related, just because it shows the level of investment that NVIDIA's customers are making into making this new reality available for everybody, right? So when you're spending effectively $100 billion a year on the CapEx of chips and then a couple $100 billion more on all the related infrastructure, and then another couple $100 billion more on power, you're talking about $500 billion to $750 billion a year being spent to bring AI forward to the masses. So I think that's the really positive take. The other exciting thing is if you're on the other side of the NVIDIA trade, which is you're working on something that does what they do cheaper, faster, or better, it's also really exciting because at some point the laws of capitalism kick in, right? We've talked about this. When you are over-earning so massively, the rational thing to do for other actors in the arena is to come and attack that margin and give it to people for slightly cheaper, slightly faster, slightly better so you can take share.
Yes.
So I think what you're seeing and what you'll see even more now is this incentive for Silicon Valley, who has been really reticent to put money into chips, really reticent to put money into hardware. They're going to get pulled into investing in this space because there's no choice. You have a company that went from $100 billion in market cap to $2.5 trillion in 4 years. It's just way too much value that is there to then be leaked back. The interesting thing to remember, during the PC revolution, which is really mostly the 90s, right? It ended in the late 90s, I would say like 98, 99, right before the dot-com bubble took over. Intel's peak market cap was, I think it got to about $200 billion. And then their average growth rate from 1998 to today was negative 1.4% a year, right? So it went from about 200 billion to about 130 odd billion. And why? It's not that Intel was a worse company, but it's that everything else caught up. And the economic value went to things that sat above them in the stack. Then it went to Cisco for a while, right? Then after Cisco, it went to the browser companies for a little bit. Then it went to the app companies. Then it went to the device companies. Then it went to the mobile companies. So you see this natural tendency for value to push up the stack over time.
So let me ask you
AI,
then,
we've done step one, which is now you've given all this value to NVIDIA, and now we're going to see it being reallocated.
So, Chamath, who's in the arena trying stuff? Some of these things working, obviously, and some not working. Yeah.
So right now, what you do is you speculatively bet on anything that kind of like, quote unquote, rhymes with NVIDIA. So AMD is ripping, the companies that make HPM is ripping, So all of that stuff, the folks that make optical cables, this Japanese company that I found that makes like the high bandwidth optical cables, ripping. So anything related to that ecosystem right now is at all-time highs. But at the same time, what you find now is like every other day when you wake up and read the trades in Techland, you find that there's a company that's gotten seeded with $5 to $50 million to create a new chip, right? You're also starting to see folks that are working a little bit above the stack and build better compilers, right? Things that'll allow you to actually build once, run in many different compute environments. So all of this stuff is starting to happen. At some point, the spread trade will be that Nvidia loses share, even though revenues keep compounding to these upstarts.
Yeah, death by 1,000 startups. All right, Sachs, I guess one of the questions people are asking right now is, have we ever seen a company at this scale and the impact it's having, not just in technology, which Chamath just pointed out beautifully, but also it's having a huge impact on Wall Street, on the stock market, on finance?
Well, the company that everyone compares Nvidia to, or asks the question about whether a historical comparison should be made, is Cisco. So there's an article in Motley Fool saying, is Nvidia doomed to be the next Cisco? There was one in Morningstar called Nvidia 2023 versus Cisco 1999. Will history repeat itself? The reason they're asking these questions is that if you go back to the dot-com boom in 1999, you can pull up the stock performance chart. You can see that Cisco had this incredible run. And if you overlay the stock price of Nvidia, it seems to be following that same trajectory. And what happened with Cisco is that when the dot-com crash came in 2000, Cisco's stock lost a huge part of its value. Obviously, Cisco's still around today, and it's a valuable company, but it just hasn't ever regained the type of market cap it had. The reason this happened is because Cisco got commoditized. So to Chamath's point, the success and market cap of that company attracted a whole bunch of new entrants, and they copied Cisco's products until they were total commodities. So the question is, will that happen to Nvidia?
Yeah.
And I think the difference here is that at the end of the day, networking equipment, which Cisco produced, was pretty easy.
Pretty one-dimensional.
Pretty easy to copy.
Moving data around, yeah.
Right. Whereas if you look at NVIDIA, it's these GPU cores are really complicated to make. And Jensen makes this point that the H100, for example, has thousands of components and it weighs like 70 pounds or something like that. I mean,
it's like a giant oven. I mean,
it's like a mainframe. It's not just like a little chip. So it's a much more complicated product to copy. And then on top of that, they're already in the R&D cycle for the next chip, right? Whatever it's going to be, the H200 or whatever it is. And so as people try to catch up with the H100, they're going to be on to H200. So I think you can make the case that NVIDIA has a much better moat than Cisco. And just by the way, on this Cisco comparison, just to finish the thought, people were making this comparison 6 months ago. And what's happened since then? NVIDIA's had 2 blowout quarters, and the competitors don't seem to be that much closer, maybe a little bit closer. But so, look, I think it's an open question.
So there's a counter here, Freeberg, which is obviously, if you follow the Cisco analogy, one of the things that also sunk Cisco was once people had bought all that capacity, there was no need, there was no file size that was so great that it couldn't be moved easily around the internet. You make movies HD, Super HD, 2K, 4K. We've created too much bandwidth. There was no use for it. So I guess that's a counter argument for maybe if we build up too much capacity, NVIDIA also could, not by competitors, but just by the build out being enough. So what's your take on that counter argument? And then whatever thoughts you have.
I think that the Cisco analogy, it's a pretty different situation because Cisco evolved the business to become much more enterprise centric. And they were able to run an M&A process like we see with enterprise software, where they could acquire and roll up lots of different product companies and sell into their enterprise channel. So do a lot of cross-selling. NVIDIA is not a super acquisitive business. And it doesn't make as much sense because they're selling much more kind of infrastructure tools, whereas Cisco moved really high up in the enterprise stack. They were selling stuff into office buildings. They were selling software. They did acquisitions to kind of fully integrate. They had a very diverse set of products that were selling through an enterprise channel, further up the value stack, and a pretty distributed customer base, no serious concentration. Even though they did sell a lot into data centers, They were also selling to telcos, they were selling to enterprises, they were selling to governments, and so on. If you look at Nvidia's revenue, they did $26 billion of total revenue in the quarter, $22 billion of which was data center, and about 40% of that was from the top 4 hyperscalers. So a full 1/3 of Nvidia's revenue in the quarter came from, I believe it's Google, Amazon, Microsoft, and Meta. And so between those 4 businesses, you know that those companies each have, I believe, at least over or close to $100 billion of cash sitting on their balance sheet. They can't find great places to invest that cash to grow revenue. And so they've rationalized away the idea that they will make CapEx investments to build over the next 5 to 10 years. And this is where that money flows.
Yeah, we talked about that on a previous episode because there's no M&A, to your point.
Yes.
Unicon's not going to let you buy stuff, or the UK is not going to let you buy stuff.
So I think that they're going to have less maneuvering capability than Cisco had in the future. And obviously there's this deep concentration risk, which is going to be deeply challenging.
I think Nvidia, this is to build on Sachs's point, is going to get pulled into competing directly with the hyperscalers. So if you were just selling chips, you probably wouldn't. But Sachs is right. Like these are these big, bulky, actual machines. Then all of a sudden you're like, well, why don't I just create my own physical plant and just stack these things and create racks and racks of these machines?
And go head to head with AWS instead of selling to them.
It's not a far stretch, especially because NVIDIA actually has the software interface that everybody uses, which is CUDA. So I think it's likely that NVIDIA goes on a full frontal assault against GCP and Amazon and Microsoft. That's going to really complicate the relationship that those folks have with each other. But I think it's inevitable because how do you defend? It's kind of the Apple problem. How do you defend an enormously large market cap? You're forced to go into businesses that are equally lucrative. Now, if I look inside of compute and look at the adjacent categories, they're not going to all of a sudden start a competitor to TikTok, right? Or a social network. But if you look at the multi-hundred billion revenue businesses that are adjacent to the markets that NVIDIA enables, the most obvious one is the hyperscalers, which are multi-hundred billion dollar revenue businesses. So they're going to be forced to compete. Otherwise, their market cap will shrink. And I don't think they want that. And then it's going to create a very complicated set of incentives for Microsoft and Google and Meta and Apple and all the rest. And that's also then going to be an accelerant. They're going to pump so much money to help all of these upstarts, to your point, Jason, chip away and nip at the Achilles heels of NVIDIA until they fall.
Yeah, and there's a great precedent for what you're saying or clues. Amazon is making chips. Google is making chips. And
Facebook's
in fact,
making
Apple,
chips. Tesla's making chips.
Yeah,
Apple's
and then
rolling
Apple
chips. Everybody's rolling
makes
silicon.
their own chips, and they got rid of Intel. And so this is how it's going to go. Your margin is my opportunity. And with all this market cap increase, the good news is it's just reported that Jensen has bought a second leather jacket. So, this market cap has enabled him to expand the wardrobe a bit.
By the way, I got to say, he looks really good. He looks super fit.
It's great.
He just
pull up a picture of Jensen.
How old is he? Is he in his late 50s?
He's going into his Harrison Ford.
He looks great.
The
he looks
salt
great.
and pepper.
He looks
61.
61?
He looks amazing.
I'll tell you something. In the zombie apocalypse draft, I'm picking him. That guy seems crafty.
He seems like he's. What do you think he does for exercise?
Balls.
No plastic. Plastic-free
No. His balls have plastic.
Steel.
All of
He's
our
got
balls
steel in there. No. His have brass in them.
No,
He's literally
his
had
balls are
brass
full of
put into
plastic.
his balls.
No, all of our balls have plastic, apparently.
Okay. Well, we have two choices here. We can go with another tech story, or we can go directly to Science Corner.
I think we should do State of the Economy and then do Science Corner.
Okay, so you want to talk about our pocketbooks, and then we'll talk about our pockets, and then we'll just make a quick detour to the right, and then talk about our balls. We're in the same vicinity, so
I think we should end on our balls.
Okay, great. Yeah.
Let's end with our balls.
At Science Corner, I can finally
told me he
relate
likes
to.
to start with the balls. So I don't know. Everybody's got different kind of vibes here.
The ball play should come a little bit later in the program.
You want to save the ball play for later, Sax? Okay.
Yeah.
I'm having a hard time keeping this together, guys.